From Washington, this is the Macrocast, a podcast brought to you by Penta and Markets Policy Partners.
Good morning. It's Friday, October 14th. You're listening to the Macrocast, now on the Penta podcast channel. Tony Fratto with Penta Group, Brendan Walsh with Markets Policy Partners, our regular, and Brai, Odion-Esene, and Brai, it's SW8, right?
SW4.
It's like doubled. I was doubling it. Brai is with us, as he always says whenever we have big global macro monetary issues to talk to. We always thought to have Brai in, which we certainly do this week. We knew this was going to be there was data this week that everyone was going to be paying attention to. We also have in Washington, D.C. this week, the annual meetings of the IMF and the World Bank, and then associated meetings around it. A lot of the large banks have their own investor meetings. The Institute for International Finance with our friend Tim Adams and Clay Lowry over there have 5 full days of programming over there, where they have a lot of economists and CEOs and analysts coming in talking about all aspects. And I was able to make it. I was on a panel over at the JP Morgan conference. I was able to spend a little bit of time at IIF and then over at the program, and seeing a lot of people at IMF and World Bank and on the sidelines also. So lots to talk about with the global economy. But the huge news this week was the expected news, which was news on inflation here in the U.S., and unexpected news having to do with fiscal policy in the United Kingdom, and both of those had an enormous impact on markets. And this morning, Brai and Brendan, it seems like it's now, I think it's confirmed that the Chancellor of the Exchequer has been sacked, and Brai, why is it? Everyone else gets fired or gets the opportunity to resign, but if you're in the UK, you get sacked. Every headline, every lead says sacked. You're sacked.
Well, yeah, it's fascinating. I was thinking about this morning, where I do believe that if this had been the U.S. Treasury Secretary, for example, it would not have been this sudden overnight. I won't say no one saw it coming, but this shock news factor. I do think there would have been a bit more stage managing that would have happened.
Yeah. Brian, put even more context to it. So what were we doing last night?
Oh, yes. Okay. So to me, last night, Brendan and I were at a reception hosted by the British Embassy and the IIF, and the guest of honor who shared a few words was Kwasi Kwarteng, who
at 7:30 at night.
Yeah. So last night, at that time, he was still the Chancellor of the Exchequer. He gave a little spiel about his plans and his ambitions for the UK economy and the budget. And
they were still going to cut taxes.
Exactly, he's going to cut taxes. Fossil this morning, he's no longer in the job. And there were news reports that he got on a plane and basically rushed back to London, probably anticipating that his job was under threat, and maybe making a last-ditch effort to convince Liz Truss that he was still in the job. But it was just very surreal to see, to be in the room with him and other people, and I jokingly told someone that maybe the pictures of him scoffing down champagne didn't go over too well with the folks back home, while the economy and, the gilts market was on fire. So maybe that might have been a contributing factor. But yeah, to answer Tony's question, it's a very British thing to have ministers sacked, right? Because you technically serve at the pleasure of the Prime Minister, and they can remove you as they see fit.
Yeah, well, given the the wild gyrations, which we should note that before this news started breaking yesterday afternoon, that Liz Truss was going to do a U-turn on tax policy and some of the spending programs. The news earlier in the week was Andrew Bailey from the Bank of England, essentially at another IIF event in conversation with Tim Adams, made very clear to the British pension funds that they had until Friday to, to rebalance that support was going to be coming to an end on today, and that caused some significant market reaction. So it has been all over the place, and but getting communications right actually it really does matter. Like you got to get the stuff right.
No, it's
the policy right too. Yeah, but talking about it right helps.
The UK pound is the best performing currency in the world this week, because the previous 3 weeks it was the worst performing currency in the world.
So it looks like the questions now are that there had been questions as to whether if he was sacked, would he be sacked? He was now, and I don't know. I haven't heard rumors on a replacement. There are questions as to whether Liz Truss's government survived. I think it does. I mean, I still think leadership opportunities in the UK don't turn quite that quickly at the prime minister level. But the other huge news of the week, obviously, was was inflation data that came out yesterday, where if I had told you what the inflation data was going to be, you would have predicted that the market would be down 1,000 points yesterday. Instead, the market went down 400 points and then rallied 1,000 points on above that before settling at, I don't know what the final number was, 870 or so to the upside yet on the Dow. I can't remember the S&P, but somewhere around.
I often joke about that I would be a terrible inside trader, because if you had given me the inside information, I'd still only get it right about half the time, the market reaction.
Of course. I mean, it's like, it's hard. Like markets are tough, you need to, and you shouldn't be day traders anyway.
No, exactly.
That's for idiots. But yeah, so we get the numbers. They're not great, but they do give a sense. I mean, I'd love to hear from you guys on what you think the market thinks yesterday. My initial interpretation when I saw the market roaring back, some of it attributed it to, the UK taking some risk off the table by rationalizing their domestic fiscal policy a little bit. But there's something else going on there too. There does seem to be a sentiment that maybe this is peak inflation. And if it is peak inflation, even if you think that the Fed is, really committed to not stopping policy rate increases until we actually see it getting, closer to target. But at least you can start to tell that story, right? If you're at the peak, if you believe you're at the peak, then you're only going down from there over time, and that makes you feel better.
I also think the number, because of the way that the BLS measures housing.
Yeah, could you break this down a little bit, Brendan? Could you just break down the number a little bit?
Yeah, so it came in, the core component came in twice as what people expected, and that was very much because the housing component was a 0.8. Usually the housing component would be a 0.1 or 0.2. And what we do is we measure it on how much you can rent your house. So both the straight rents and also then what your house is worth. And we do it kind of with a 6-month rolling average. So it's a sticky number. Mm-hmm. And that was the huge, reason that the number was so much bigger than people expected. But it's so detached from what we're seeing in reality, where we know from real-time data from realtors and Redfin reported yesterday that rental prices were down significantly. So it's almost the number was so off that it gives the Fed maybe some cover to not be so attached to the CPI print, which it did after the last two prints, which came in higher than expected. So I think it maybe gives the Fed a little cover to focus a little more on the real-time data that we're seeing, which is showing a slowing economy. And it's also showing an economy that's seeing inflation prices come down. But beyond that, within this report, goods prices were flat. Yeah. And the entire increase in the inflation was services. So while I don't think the Fed should stop completely tightening, I think that their desire to raising at 75 or 100 bips every meeting is not warranted. And I think, especially after the meetings that you guys have had this week with global, I think they'll break the global economy and the financial system if they keep trying to go as aggressive as they've said they want to.
Well, and it should be noted in the minutes of the September FOMC meeting that came out on Wednesday that they did say in there that at some point it would be appropriate to slow the pace of tightening while they evaluate the cumulative effects of what they've done already to that point. Are we there yet? I don't think so, but I think we're getting to the point where they might want to start considering, okay, let's kind of take stock of what we've done and the impact it's having on the economic activity. And
the 75 basis point hike is fully priced in by the markets for the November meeting. So they kind of have to do that, but everything beyond that, I think, is open for reevaluation.
What I do find fascinating is that this week we've seen an example of basically the markets pushing policymakers, in this case, the UK policymakers, to make an about turn on like an announced.
No, it's a really important point. This is
right. So it's like
an example where markets changed a government policy. They
exactly.
Change it. Yeah.
Exactly. So I'm curious to see if something similar happens between the markets and the Fed, where the Fed is being very vocal about what they want to do. The market maybe feels differently, and then who blinks first.
It's interesting to think about it that way. I mean, I think just reading the market yesterday morning, though, right, is the headline. And they're doing some analysis here too, though, right? Because if you saw the headline, you see the headline. I think Brendan, you said 75 basis points is baked in, but if you see that headline, you think they could go to a full point, right? Like that had to be what you think until you go break it down and see what the components are. Then you do get a different. I think you're right. Like you do get a different. It's less even about like how you feel and sentiment. You could do the math on the housing piece, right? I mean, like we could see it right now where that number is going over time, and it's going to go lower. Now the question I don't have and I ask you guys is, what about? How did you guys feel about wages?
And going back to that inflation print, where the increase was in services, and that's entirely related to wages. So the Atlanta Fed has a very good measurement of wages, where they kind of take it from surveys. And it's not just, you don't have the denominator effect, where just like you have more people, so wages go up or down. It tries to capture exactly. So for the first time in a while, it actually decreased. So I think we are seeing a moderation in wages. I mean, just by watching the news, every day you see another company announcing pretty large layoffs, especially in the tech sector. Taiwan Semiconductors yesterday had a huge announcement, which they're kind of the bellwether for the semiconductor industry. And semiconductor chips are in literally everything, from your car to your watch. It's a great economic indicator. And they announced a 20% reduction in headcount, and every other tech sector is going to kind of follow that. So I do think we're seeing moderation. Also within the service industry, you're seeing people come back. It's less hard to hire people in the service industry than it has been, which is a good sign for wage moderation. What do you see, Brai?
Well, yeah, I guess this is where my bleeding heart shows through. I tend to focus more on the BLS has a release, the real earnings release that it does, where it strips out.
Yeah, that's a good one.
The inflation impact and looks at just, and I mean, real hourly earnings were up. Actually, they fell between August and September by 0.1%. Once you accounted for inflation. And if you looked at production and non-supervisory employees, which I use as a proxy for what I call working class Americans, it was up just 0.1% between August and September.
Yeah.
Right. So we're not seeing massive gains that you might assume would be the case in a tight labor market. So I think that definitely is an indication as well that things are not as hot as they were last year.
Yeah, and but it is the thing that, like, I mean, look, I don't necessarily want to see wages slow down, or I don't want to see them falling. I'd like to see them, because you don't really get wages falling. What you get is
you want a plateau.
Yeah. I want people to earn good wages, but wages are the thing that gets sticky, right? Because that's what happens. There are a significant component, and they don't generally fall. The adjustment mechanism is the unemployment rate. People lose their jobs, and then you get a slowing in increases, is what happens. Whereas you do have lots, like we said with housing, like we know a lot of housing, the prices of a lot of homes are going to go down. They are going down. Rent can go down. Used cars can go down. Like there are a lot of components where the price can actually fall, but it doesn't happen.
Too,
but it's what can keep the inflation. It's what can keep inflation elevated, is the fact that wages are a significant component and they tend not to fall. And we haven't seen, look, we just talked about, anecdotal measures of, reduction in employment. We're not seeing that in the data, really, right? I mean,
no, not even the
jobs report. So
the initial claims are still kind of at historically low levels. They've increased a little bit, but from a week to week, that's almost just noise a little bit.
Yep.
And I've always wondered, because I had to consider with someone the other day, is like, how do you account for the change in people's expectations, right? Like, I still remember a time when, I think like an order of wings at a bar was like $8.
Yeah.
Right. And now it's like $13. At which point does that become the new normal, where you don't blink anymore when someone quotes you $13 for an order of wings or whatever it is, where that all of a sudden that puts a floor, almost like a permanent floor underneath that good or that service going forward, right? I think that's part of the problem, that it's hard to quantify that. It's like, when do people start accepting certain prices as the new normal, and they just say, fine, I'll pay it because that's how much it costs. Right?
It's a really important point, because I do think inflation is going to moderate back to the traditional levels, but we're going to stay at the new prices. A beer is going to be 12% more expensive than it was 2 years ago. Yeah.
Look, maybe it will. I mean, there is some stickiness, but like, I mean, it's you remember, I'm a lot older than you guys, and so when I was going through macro and learning about pricing, there's all this talk about how prices can be sticky because it's really hard to change prices on the menu, right? It's like really hard.
You have to reprint things.
You have to reprint menus. You have to reprint, you have to you send out, even if you're doing sales, send out the sales sheets, the order sheets with the new prices on them, that, all these kinds of things that made a lot of sense in a pre-digital world. And in a post-digital world, these things are really easy to change.
Yeah, it's a really good point.
Yeah, they do discretionary pricing. Amazon can charge me more than they charge someone who earns a whole lot less money than me, right? Like, there are like all kinds of prices.
Yeah, you can have an algorithm that knows, he's got a lot more money.
I'm not price sensitive, so maybe I'm brand sensitive, not price sensitive. They show other people other ranges of things. So pricing is a little bit more perfective. That stickiness on even goods. So even like the beer thing, like, I agree. I mean, there's a big hurdle, right? Because like the way that you get that, Brai, is someone else opens up a place next door, and offers wings at, $12, $15. You know what I mean? It's like, but it's a hurdle, right? And what we know is that in the case of just that one narrow sector of the economy, we've lost a lot of competition because of restaurants shut down and things like that. So whatever, it's going to be interesting. I mean, I think the bottom line is that it hopefully, if we
but also, Tony, that's a really good point, because we're coming out of a pandemic where a lot of businesses closed, which was part of the reason why the inflation went up so much. So now we're raising rates to shrink the economy to get rid of inflation. But that's also making it more difficult for these new competing businesses to open up. So we're just in a very unique time.
Yeah.
It's kind of this time actually is different,
Yeah, I don't want to say people shouldn't confuse that when I say that we're in a transition. I'm not talking about transitory. We are in a transition. We have been through some pretty volatile transitions through COVID in lifestyle choices, product desire choices, service choices, a lot of things that people have adjusted one way and then back another way over the past couple of years. We have not fully completed the transition to whatever the economy is going to look like for the next period.
Yeah. I mean, DC is a great
we're getting there.
When you come to DC on Wednesday, it's pandemonium. It's back to normal. Traffic's busy. Everyone's in the office on Wednesday. But if you come in on a Monday or Friday, it's a ghost town.
Yeah. All right. Hey, let's take a break and come back. I want to talk about the global economy and what we're seeing around the big blue marble. You're listening to the Macrocast.
Penta is the world's first comprehensive stakeholder solutions firm. We are a one-stop shop for the intelligence and strategy leaders need to assess a company's reputation and make decisions that improve their positioning. As executives in the C-suite must account for a growing set of engaged stakeholders, all with distinct, fast-changing demands, Penta provides real-time intelligence and strategy solutions. We work with clients solving complex global challenges across a variety of industries. Our clients span technology, financial services, energy, healthcare, and more. To learn more about how Penta can support your company, check out our website at pentagroup.co, our Twitter at pentagrp, or find us on LinkedIn at Penta Group.
Welcome back to the Macrocast. We have Brai, Odion-Esene with us, and as always, Brendan Walsh with Markets Policy Partners. And guys, I have to say this has been a really terrific, annual IMF World Bank annual meetings week that we've had here, and for the uninitiated. The IMF and the World Bank have their spring meetings in April, their annual meetings in October. Spring meetings are always in Washington, D.C. The annual meetings are they're on an Olympic schedule. They're 3 years in D.C. and then 1 year. I think they're next year in Morocco, if I'm not mistaken.
I believe so. I can double check. Yeah, I think they always move around.
Fourth year is always in another member country, and it's wonderful collection. I always want people talk about like the World Economic Forum. You get as much talent in Washington of high profile people, finance ministers, central bankers, private sector bankers, a lot of corporate leaders. All converge on Washington at the same time in the same week, and a pretty robust set of programs and discussions, and just a chance to see a lot of people. And someone who's a former Treasury official, we'd have our G7 meetings, our G20 meetings, the G10 meetings, the IMFC meetings, tons of bilateral meetings, and so it was a heavy work week. But a lot of discussion about the global economy from a macro standpoint, a country standpoint. What's going on in the world is the topic on every street corner. So if you're interested in those things, it's sort of a cornucopia of opportunity to listen to really smart people and talk to a lot of smart people. And so this week felt like because this is the first one that was, I think, really fully open. Since COVID started, so since the fall meetings in 2019, it was really nice to see, everybody out and at meetings, and had a chance to see a lot.
Brai and I were laughing that it's like the Emmys or the Oscars for dorks, where you get to see the undersecretary of
the dorkiest dorks.
Yeah, I had to explain to someone what it meant to be DC famous.
Yeah,
it felt like this week was like a lot of DC famous people were in town, and you had to know that sort of thing.
Yep. It's true, but I would tell you that the issues are pretty weighty, right? There are a lot of really a lot of serious issues going on out there right now.
On the global scale, this is as big of a week for everyone to come together as in the last, say, since the global financial crisis, I would say.
I think that's exactly right. I think it's been that long since we've had this kind of concern and uncertainty, and it stretches from concern over, everybody dealing with inflation, everybody dealing with the dollar. The phrase I heard over and over again today as sort of a touchstone is, about the strong dollar, and it's our currency and it's your problem, but it's your problem. Yep. And it's kind of what it is for the world right now. It's a very, very strong dollar. And that's forcing, a lot of countries, especially emerging market economies, to adjust their, to raise rates on their own to keep their currencies competitive. Creates problems with growth in their home economies. The strong, if you've been lucky enough to borrow in your own currency, you're mostly okay, but it's not everybody can do that. If you've had to borrow in dollars, now your ability to roll over debt has just gotten to be much more expensive. So, and then you have we talk about the cost of things. Food and energy are still very, very high for a lot of countries. There is an emerging food crisis that has started, and it's not going to be over soon. We're going to be dealing with it for a few years. Yeah. So that's pretty big. And then Europe is Europe in recession. The UK doing whatever it is it's doing. Yeah. It's probably in recession too, right, Brai?
Yeah.
Yeah. How did your discussion?
OPEC cutting production.
OPEC and Russia teaming up. Saudi, our erstwhile regional collaborator, is teamed up with our enemy to try to wreck the world economy, it seems.
What do you think? So I guess they call it the NOPEC bill. Do you think Congress is going to get involved and pass a bipartisan, anti-Saudi, anti-OPEC legislation?
I don't know. I do think one of the ideas that has emerged, got the chance to spend some time with some Treasury people and see, Janet Yellen speak a couple times this week. Where she is, she's talked about the price cap that the G7 is trying to implement, and I don't know whether it'll be successful or not. I do think the idea, if you're going to have it is easy for a country that is essentially energy independent, like the United States, to say this. But if you are going to have a cartel, and a cartel in particular that acts irresponsibly, given the challenges facing the global economies and all of its customers, certainly not a customer first cartel, right? Right. That a buyer's cartel does make some sense, and to put pressure on, put counter pressure on the cartel. So whether that happens or not, I don't know, but there is a logic to it.
I agree. Yeah, and
what have you guys
been pushing that way already? Yeah. What do you think, Brian?
Well, I mean, so I always find it funny the tug of war that happens. And Tony, you probably remember, because I think it was the last year of George Bush when oil was approaching, I think it was like 150 or something.
Yeah, it got to 150.
And then there's a summit in Jeddah to talk about what can be done to sort of address this. So I feel like, every couple of years this comes up, and then there's like, why does this cartel exist? And it needs to be broken up, or their power needs to be diminished. But I do feel like every time, like, for example, when we do like a release from the SPR or a joint release with other like IEA countries or OECD countries, that is also a joint effort to manipulate prices, right? Like, no, seriously, it's like buyers want to manipulate the price to make it lower, and the sellers want to manipulate the price to raise it, right? And so I don't view it as like a betrayal, so to speak, that OPEC did this. I think they're acting their own self-interest in the same way America or whoever else will act in their own self-interest to bring the price down. So I think the rhetoric around it is probably over the top from Congress, but I guess lawmakers, that's what they do. They want to look like they're doing something. They're outraged. But I think basically what you're seeing is like market economics at work, right? Like there's, again, the tug of war between sellers and buyers for the upper hand. So yeah, that's just my 2 cents. I think I think it'd be overblown to have a bill to target OPEC. I just think we just need to be smarter about how we try to influence, their policies, because there are countries within OPEC that are not as diversified as a Saudi Arabia, and so they do rely heavily on the oil price to fund fund a lot of things. And so for them, it is a matter of like, we can't pay for stuff unless the price of oil stays above a certain level.
Well, what does it mean for a country like Nigeria, Brai?
Right.
And so that's one example I was thinking of, because right now I think a lot of people realize is that a lot of these cuts that were announced are very symbolic in nature, because really only Saudi Arabia, maybe the UAE have the capacity to cut. I think a lot of other countries are actually not meeting the commitments, including Nigeria. Yeah. Right. So saying like Nigeria's cut production doesn't really mean anything, because Nigeria's not meeting its actual production levels anyway.
Right. Yeah.
Right. So because of infrastructure issues, investment issues, etc. And
that's why you didn't see a big spike in the price of Brent or WTI. It went up a little bit, but we're kind of, it put a floor on it rather than, rallying at $10, $20, $30.
Yeah, exactly.
But it's Brai, I get your point on this is just suppliers and buyers competing as they should in some way. So I would say, and this is like not at all novel for OPEC. It was the very deliberate way of sort of doing it, link the arms with the Russians right now. Is the
optics were not great.
Yeah. Especially it's leaked out. We asked them to not do it, and they did it.
Yeah. They went out. I mean, they did go out of their way to do that, and so that makes them seem like not just a neutral market participant, but but I agree with you. It's what they would do anyway.
No, this was a decision to try to help Russia in Ukraine, because Putin's last ditch effort is to try to freeze Europe in the winter. So it was entirely clear that that's why Saudi pushed this policy.
I think one thing that's not being discussed enough is China, right? Because they were like one of
totally agree. China's on the back burner where it should be. Yeah. In normal times, this is what we would be talking about right now.
And especially as a buyer of oil, right? Because like I remember a period when, based on like what the Chinese GDP numbers were, the oil price would fluctuate, right? Because it would mean either more oil being bought or less. And so I do think that regardless of whatever the market price of oil is, Russia is finding there less and less buyers available for its oil. The primary ones still left are probably India and China. And if you're India and China and okay, I'm your last resort for your oil, I don't care what Brent is. I don't care what WTI is. I'm not telling you, here's how much I'm going to pay. Take it or leave it. Right?
Yeah, it's kind of fascinating. I wanted to ask you guys both about this, because that's exactly the kind of thing that was on my mind when I was listening to Secretary Yellen talk about the price cap, and I thought,
isn't it already happening?
It's already happening, right? I mean, who is paying market rate for Russian oil?
Nobody.
Right?
Yeah, I think it's like $40-50 a barrel. Certainly India, that's what they're paying, and China is not.
That's what I thought, and I wanted to check with you guys to see if that's true. But that was my sense. Is like they're already.
And those are the only two countries that Russia is able to sell it to right now, and they're not idiots.
Yeah,
so it seems like it's a price cap already. Now, are those countries reselling Russian oil?
No, so that could be where the issue lies. Is that it doesn't just go there and stay there. It ends up being moved on somewhere else at maybe a higher price.
Yeah. Now, I guess in the case of China or India, rather, I mean, India does have refining. As I understand it, I think they both have some capacity to refine, but you're value adding at that point if you're refining. So it's
right.
Yeah.
What was your biggest takeaway, Tony, from the IMF, World Bank, meetings, gatherings, talks? Because I feel like it's always like a giant theme, right? And you mentioned a couple of themes, but I think what's stood out the most for you besides, like you said, you mentioned the strong dollar?
Two things, two things, but one observation on one of them, and the other one is just distressing. The one is on emerging market debt. That there are significant challenges, and you mentioned the Chinese. The Chinese are not going to be They have not been so far, and very unlikely to be helpful in helping countries restructure debt. So the challenge of restructuring debt for countries who are being whipsawed by these, very large forces, it's going to fall on the IMF and the bank and bilaterals, but to do it in a coordinated way, which allows you to do it in some kind of equitable way without the Chinese is really challenging. But so I thought that was, I kind of knew that. I've dealt with a lot of emerging market debt crises. It was the thing I dealt with my very first day in Washington and or in the U.S. Treasury Department. At that time, it was Argentina, it's always Argentina. Perennial, yeah. Argentina, Brazil, Turkey, Uruguay. There was a lot of distress at that time, and it's so I worry about that. But it was an interesting thing. I heard an economist talking about some interesting perspective on private sector debt in these countries, and because in terms of whether there's stress in the private debt markets. And she made the case. I wish I could remember her name right now, and I'd give her credit. But she was talking about the fact that high grade corporate debt in emerging market countries is actually holding up really, really well. It looks a lot and pretty tight to high grade credit everywhere. But low grade, lower grade corporate debt is blowing out, beyond. But it's interesting that market participants have are able to have a good look-in view about well-run companies, including in emerging market countries, which has not always been the case. There's always been this sort of lack of discretion, where all Brazilian companies are going to be treated the same, regardless of what their individual performance is. And so that little bit of discretion made me a little bit hopeful. The thing that has been and continues to be overwhelmingly distressing is the food security issue, which is not getting better, even though some grain is coming through the Black Sea right now. It's actually getting worse, and it's going to be bad for a long time. And I don't know if I think I mentioned it on the show before, but this next week I'll take over as chair of World Food Program USA, the advocacy arm for the UN's World Food Program, which I'm really excited to be able to work on these issues with them. But we're going to go through a very, very challenging period, and the stress on poor people in a lot of places around the planet is going to be maybe the issue of our times for the next few years. Mm-hmm. On that very
positive note,
yeah. I don't know. How about you, Brai? What's your takeaway been?
Well, I think it does feel like there's a lot more coordination, or attempts to coordinate and cooperate more than they used to be in the past. I feel like in the past, everyone sort of like was defending their own interests and, saying, well, or that everyone had their own club. But I feel like the multitude of crises from starting with COVID through to now has kind of like reinforced for a lot of leaders that none of these things that can be solved on your own. And that a collective effort is needed, whether it's, on the, Russia-Ukraine issue, inflation, like you said, the debt levels that emerging market economies are dealing with. I think that's in my sense. There seems to be a lot more willingness to coordinate on a lot of these things than there has been in the past, which I think is a hopeful sign for the future. But famous last words.
Yeah, Brendan, what are you hearing?
I think the IMF, just when they kicked it off, saying inflation is important, but also we can't over tighten and blow up the global financial system. I think that was a really important message, because while the Fed has its mandate that is U.S., you can't ignore that you still are the central bank of the world.
Yeah.
And like the markets today, or the last 2 weeks, forced the UK to change policy. I think too that the markets and the financial system is under enough stress that the Fed is going to have to, I don't know, pivot's not necessarily a word, but they're not going to be able to hike as much as they currently.
We're not using the P word right now, are we? I'll believe it when I see it. We will get to talking about that, but I think it's too far in the future for us to even raise anything. Yeah. All right, guys. Brai, thanks for joining us today, as always.
Thank you. My pleasure.
Yeah, Brendan, we'll see you next week on the Macrocast. John will be with us next week, Brendan.
Yep, John is in Seattle, and the 6 a.m. wake-up call was too much for him.
All right, great. Thanks, guys. Have a great weekend.
Thank you all.
Thank you for listening to the Macrocast. Please remember to subscribe, rate, and share.